What if I told you the world's most hated stocks are now showing the biggest fundamental and technical opportunity? The sentiment noise is finally fading, and we need to look at the raw numbers. We're breaking down my top 3 Chinese stocks, Alibaba, JD.com, and NIO, using the granular fundamental data to see the actual financial trajectory, and then integrating my extended technical analysis for a full roadmap. Before we dive into the specific company numbers, we have to recognize the macro pivot. The core story today is the shift from regulation to support. Global funds are starting to return because the government action is real, trillions in stimulus, and clear policy tailwinds favoring the tech giants are replacing the crackdown. This supportive environment, combined with historically low valuations, is what sets the stage for our deep dive opportunity. First, let's talk Alibaba. BABA is the anchor of this portfolio, and the data tells us exactly why. Looking at the revenue line, the sheer scale is astonishing, projected to exceed $1 trillion by March 2026. But the key recognition is the resilience in recovery. Notice the massive hit the regulatory pressure caused. Revenue growth plummeted to just 1.8% in March 2023. However, the forecast shows a clear recovery, with growth projected to hit 8.5% by March 2026. This acceleration is the fundamental signal that the worst is over. Furthermore, look at operating income. This is pure profitability. Even during the crisis, where growth slowed to just 1.8%, Baba's operating profit never turned negative. In fact, it's projected to climb from $106 billion in 2023 to over $193 billion by 2026. This isn't just a profitable company, it's a financial fortress. Technically, Baba is reflecting that recovery with serious momentum. The stock already shot up from my key accumulation zone of $100 to $110, and the current chart shows we are entering a crucial price discovery phase. Our midterm price target is an aggressive $270. Why $270? Technically, that level aligns with a major Fibonacci extension level from the pre-crackdown high and represents the first significant psychological barrier. This target is highly achievable as long as the stock holds the recent breakout support around $165. This leads to the massive upside. Our long-term price target for Baba is between $480 and $740. Next is JD.com, the stable value play. The data proves its discipline. While its revenues don't match Alibaba's massive scale, the key is the consistency of its growth and profit generation. Revenue growth hit a low of 3.7% in December 2023, showing the macroeconomic pain felt across the entire consumer sector. However, the critical recognition is the projected acceleration back up to 14.1% by December 2025. Most importantly, look at operating income. JD is a machine of consistent positive profitability. Even during the lowest growth period in 2023, the company generated over $4 billion in operating income, and it is projected to remain stable and climb to over $5.4 billion in 2024. For investors looking for low volatility exposure, this consistent profitability is the #1 reason to own it. Technically, JD is the ultimate catch-up trade. It has broken out of its prior consolidation phase, moving past my initial buy zone, but the technical charts suggest we are right at the start of a major multi-month surge. We need to clear the immediate resistance at $42. Once that level is broken with conviction, the path is clear. Our midterm price target is between $69 and $93. The $69 level serves as a strong point of prior support and will likely act as our next major resistance. For the patient long-term investor, the ultimate technical prize is our long-term price target of $195 to $237. Finally, let's look at NIO. This is the high-growth, high-stakes bet, and the numbers here require the most careful reading. The initial growth was stellar. We saw triple-digit revenue increases in 2020 and 2021. However, the major recognition here is the massive financial burn. Look at the operating income. The loss went from around -$4 to $5 billion, to a staggering peak loss of over -$22 billion in 2023. This is the risk you are fundamentally taking. The key fundamental signal for optimism is the projected future trend. The loss is expected to narrow significantly, coming in at -$15.9 billion by December 2025. This narrowing of losses, combined with revenues jumping back up to a projected 37.7% growth in 2025, is the critical financial path to profitability the market is betting on. Technically, the stock has recently risen very strongly, and while that's exciting, the chart is showing signs of being overheated. The technical analysis suggests a healthy, necessary short-term correction is likely. I expect a pullback of around 20% minus from the current price. This is not a reason to panic. This is your strategy. That 20% pullback will take the stock right into my ultimate accumulation zone, somewhere between $5.41 and $6.66. Technically, this range aligns perfectly with the stock's 200-day moving average and a strong support level. My strategy is simple. I would use every 20% downfall to aggressively add to the position because the long-term potential is so vast, leading to my massive long-term price target for over 5 years is between $83 and $107. So, that's the deep dive with the full roadmap. Alibaba is the financial fortress, JD is the stable profit machine, and NIO is the explosive growth bet. Let me know in the comments, which of these deep fundamental plays are you adding to your portfolio?